Hello and a very happy new year. 2020 was no ordinary year, and so the budget 2021 will also not be an ordinary budget. If you've been watching this show, we have had enough indications from the government that the public spending momentum will continue and fiscal deficit may not be a big cause of worry for the finance minister. In today's episode, we will look at headlines of last week which may have a direct bearing on the upcoming budget. I'm joined by our consulting editor and policy expert, Mr. Ashok Kumar Bhattacharya. Hi AKB, welcome to the show. So let me begin with one of the big headlines of this week, which was about the core sector data. We have seen a big, steep reduction in the core sector data in November. So what do you think the budget can do to boost investment and spur economic recovery?
The first lesson that I would say from the core sector data is don't underestimate the importance of increasing investment at a time when demand recovery will require more investment to be made so that there is greater demand for jobs and therefore people can go out in the market and sustain that recovery in the economy. If you look at the latest government data that has come for the first 8 months of the current year, you will realize how fiscally conservative has this government been. After 8 months, the government's fiscal deficit is just around 10 lakh crore,
yes,
whereas the government's total borrowing limit is 12 lakh crore. That's point number one. Point number two is the government's total expenditure in the first 8 months has increased by just around 4.5% or less than little less than 5% compared to the budgeted growth of 13%. And the net tax revenues, which were supposed to cause for major concern for the government's revenues, now you see that the shortfall compared to the budget target and as well as the shortfall compared to what we collected last year is actually shrinking very rapidly. As a matter of fact, the gross tax revenue collection is right now less than last year's collection by only 13%. And this used to be around 22% in the first half. So you may end the year with a fiscal deficit of around 6.2%, which is more than double of what you had projected. You had promised to spend 13% more this year compared to last year, but you are actually spending at this point in time only 4.5% more than what you had promised in the current year. So the core sector data underlines once again the need for spend more, invest more, so that the recovery in the economy can become sustainable.
And this investment has to come from both the public and the private sector.
Absolutely.
As you said, public sector investment as well as private sector investment has to be boosted. One of the demands from the India Inc. Is that the single structure of income tax should be brought in place, and that the whole dual structure is only adding to confusion and not actually providing any relief. What do you think, sir?
The option of two different rates, one with exemptions and the other without exemptions, have actually created some confusion. So it will probably make sense to unify those rates and eliminate all the exemptions and move towards clean and transparent taxation regime. But going beyond that, I think the bigger challenge for the government and for the finance minister next year would be how do you make sure that the tax base does not shrink? What has happened over the last couple of years at least is that our tax base, the direct tax base, has actually shrunk. So instead of the tax base widening, and we are bringing more people under the tax net by raising the exemption slabs, you are actually have lost a large number of people out of the tax net. Now, so much so that if you compare India's per capita income, and if you see the tax, the minimum marginal tax rate kicking in at that level, there is no connection between the two. Today, a person who is earning about 8 to 10 lakh per year actually can do without paying any tax under various schemes. Now, if you convert that into his annual income or a per capita income, you see there's a large gap, and this needs to be plugged, and you need to tax more people relative to their incomes. Instead, what we have done is that we have left a lot of people outside the tax net, which is not going to be helpful in the finance minister's task of collecting more revenues next year, which will be needed to finance the expenditure. The taxes to GDP ratio for the center is now less than 10% of GDP. Now, this used to be around 11% some years back, but it has come down to around 9.5% of GDP last year. Now, this needs to be raised. Similarly, the tax buoyancy as a result has fallen to less than 0.5. Now, which means that there is need to widen and the broad base the tax net so that more people pay taxes, but maybe at a moderate rate.
I hope the FM will maybe relook at this whole tax structure. The other thing that is being talked about is the recapitalization of banks. With the rising NPA situation that we are in right now, there is a debate about whether it is a good idea to recapitalize banks. Would love to get your thoughts. Yes.
It's a very important point you have raised. The bank recapitalization is needed because if you look at the latest Reserve Bank of India report, the non-performing asset level are set to go up, especially after the pandemic and the various moratorium and restructuring of loans that have taken place. So therefore, you need to capitalize the banks adequately so that their lending operations don't get affected. And almost 65 to 70% of the banking sector is in the public sector's domain, and the central government is the majority shareholder in most of them. So the government has to provide for more money in the budget. You will be interested to know that in the 6 years of the Modi regime, the total amount that was infused into public sector banks' equity was as much as rupees 3.2 trillion, and that accounted for almost about 40% of the total money that the government invested in public sector equities. So you can see that how public sector banks have eaten up almost 40% of the total money that the government in the last 6 years have given for equity infusion in the public sector space. But in 2020-21 budget, you saw that there was no budgetary provision for public sector bank equity infusion. Now, last year there was 65,000 crore. The year before, it was 1 lakh crore. But in the current year's budget, there was no provision made. So the government has now decided to use some zero coupon bonds, which are fairly controversial because there are valuation issues, there are audit issues, there are accounting issues. So let us not go into that. But the short point is the government has to find the resources to recapitalize the public sector banks unless it plans to dilute its shareholding and ask these public sector banks to offer their equity to the markets and bring down the government shareholding below 51%, which means privatization, which I don't see happening in the near future. So if the government does not dilute its stake in the public sector banks, it better provides money, adequate money, for capitalizing the banks so that they don't fall below the benchmark that is required for them to stay, in a sense, solvent and keep their lending operations intact.
So, it's hard not to talk about the whole farmer agitations that have been going on. And agriculture is one sector which sort of saves growth, especially in current times when everything in the economy is under pressure. Agriculture still saves growth. What can the budget do for this? And also, it has raised the question that should it be a central subject at all, agriculture?
Agriculture is to be funded not just by the center, but also by the states. Out of a total 30 trillion rupees central government's budget, the union government's total budget size is 30 trillion. Now, out of that, less than 5% is allocated to agriculture. So it's around 1.4 trillion rupees is provided to agriculture. Now, last year, you saw a major intervention made by the government by introducing the Pradhan Mantri Kisan scheme, under which all farmers, landholding farmers, would get a minimum income support in a year. The money will be disbursed every quarter. For which there was a provision also made around 83,000 crore, 85,000 crore money was provided for. And I think that was the one big chunk of the agricultural outlay. Apart from that, what the government can do and should do will be in the various schemes for providing irrigation facilities, seeds, everything. But agriculture, the subject in itself, is actually one such area which actually the states must come forward and do a lot more. To expect the center to provide all the answers to the big questions that the agriculture sector raises will probably not fair, particularly when we are discussing the budget.
Thank you so much, sir. This will definitely be one of the most watched out budgets that we have seen in some time. Thank you so much for joining and sharing your insights today. If you liked this video, do share it and subscribe to Business Standard. You can also visit business-standard.com for more news, views, and insights. We are also present on all social media platforms from Twitter, Facebook, Instagram, LinkedIn. Do follow us and stay tuned.